When I talked about these private investment funds, historically, post 1929, you couldn't invest in a venture capital fund as a quote unquote regular person because the government would say you need to be an accredited investor. Accredited investor is a defined term, and it means you have either a combination of $1 million in the bank, excluding your home, and or you make over $200K a year for the last 3 years. The rules have changed every couple of years, but that's roughly what the rule is. The SEC recently has made changes such that you can sit for a Series 65 exam, which is a multiple choice exam. And that exam qualifies now to make you an accredited investor. You could take the time, sit for the exam, and now you can go to all these VC funds, and when they ask that little check the box on the site, am I an accredited investor, to get access to the documents and the information, you can now check yes. If I were to say this like 10 years ago, I won't speak to say that all that crypto is for everyone, but I will say, and I didn't even talk about this, but as an attorney who's been involved in crypto since 2015, when the Gemini exchange first tried to get their first Bitcoin exchange, I was the one drafting those applications to the SEC and they got rejected. The industry has come a long way. I would consider all of those things, unless you're really an expert, as basically speculation. And to a percentage number, outside of crypto, let's say in the traditional alternative space, what most folks would look at is a percentage anywhere from 5 to 20%, depending on when do they need that money, because the investments tend to be illiquid. When you're in a fund structure like I showed, you're typically locked into a structure for 5 to 7 years on the VC side. A hedge fund typically allow you to redeem quarterly, but in each case, you need to be basically comfortable with the risk of loss and comfortable with that position size of that bet. And with that, I will say, I am an attorney, but I am not your attorney. And everyone here should make sure that you do your own research. And it's important that people really understand these things, because this is how a lot of wealth is being created. The real importance here is not just, betting it all on black. It's really the educational component, because it may take you 3 or 4 years to decide you're comfortable to do any of these things, or you may never be comfortable, but you are also learning about an area that you may have had zero idea about. And that in and of itself is valuable. I think it's a good thing that people have access to these markets. At the same time, I think that if it's abused, it can be a bad thing. If you think about it, like with this group especially, okay, trading options. Options are great, but they're highly volatile, and you can be set for life or you can lose it all. That means you have to do what's called risk adjust your position sizing. If you think about it, it's no different than going to Las Vegas and betting it all on black. Just because you wouldn't do that at a casino on the Las Vegas Strip, you shouldn't do that in your house on the internet.